It's Bush Villa Academy here again. So in today's video, I'll be teaching you how to make use of the Fibonacci retracement to cash out from the Forex market. And I also want you to know that this Fibonacci retracement tool is a tool that I've been using before now for years, and it has actually been working for me. So I want you to sit back, relax, and pay attention to everything I'm going to be explaining to you. Once I'm done explaining, I'm also going to go into the Forex market, and we are going to make use of an example for many of the currency pair. Alright, so without much ado, let's get started. Alright, so we have the Fibonacci retracement tool. Now, what do we mean by the Fibonacci retracement tool? Now, this is a tool that is used to determine the end of a retraction movement before another impulse movement occurs. After a break in market structure, you might want to wait for 50% retracement. So, Fibonacci retracement tool helps you determine the end of a retraction movement before another impulse movement occurs, whether in an uptrend or in a downtrend. Now, what do I mean by that? So, for instance, if we are actually in an uptrend, and you know that in an uptrend we have a push, a pullback, can you see? Higher high, higher low, higher high, higher low, higher high, higher. Yeah, that is what we have in an uptrend. Then for a downtrend, we have lower low, lower high, lower low, lower high, lower low, lower high, and then lower low. So we have our uptrend here and our downtrend. So we have a push, pullback, a push. Now, in a downtrend, don't forget the low sustains the high. In an uptrend, rather, the low. In an uptrend, the low sustains the high. And it means that the low should not be taken out. It means that the low should not be taken out. In a downtrend, the high sustains the trend. Can you see? That means this high should not be taken out. Can you see? This high should not be taken out, in as much as we are still in a downtrend. For an uptrend, the low sustains the high, so the low must not be taken out. Can you see? But that is not even our point of discussion today. We are looking at the Fibonacci retracement. So now we have a push or an impulse move, then a pullback or a retracement. This is a pullback. This is a pullback or retracement. Okay, so this is a pullback or a retracement, a push up, pullback. Now we can say that we have a push, a pullback. Then this was the last high. Then we had another impulse move that broke this high. So since this high has been broken, we have a break of structure here. Please let's pay rapt attention. We're having a break of structure. A break of structure US. So we have a break of structure here. Can you see? So we had a pullback and an impulse move, and this high now has taken out this last high. So we're having another what? Another break of structure. Having another break of structure. So we're having another break of structure. Can you see? So and we have another break of structure here too. Please make sure you are paying rapt attention. So this is another break of structure. So this is an uptrend. So this is a push, a pullback. This is the end. This is like a retracement, and this was where the retracement got to before a push up. Then we had another retracement before a push up. Then we had another retracement before a push up. Now don't forget that in an uptrend, for an LD uptrend, for you to have an LD uptrend, this is what you're supposed to have: a push, a pullback, impulse correction, impulse correction. So we have pullback, retracement, or correction, or correctional movement, or let's say correction. Then we have a push up, or we have an impulse. For this one, we have a push up, or can say impulse. Alright, so you can see impulse correction, impulse correction, impulse correction. Can you see? Impulse correction, impulse correction, impulse correction. Now, impulse correction. Now this was the end of the first correction. This was the end of the second and the third. So our major aim here is that we want to know where the end of this correction, where to get to before this move up. That's our major aim, and that is what the Fibonacci retracement tool is going to help us to do. So this is impulse correction. This is a pullback. Then before the move up. So this pullback, now I want to know how long will it take. The pullback, what is the length? What is going to be the end of this retraction before another impulse move? Then look at this pullback too. Where is this pullback going to get to before it starts going up? So, and that is the idea. That is the reason for this class, and I'm going to be explaining that to you. And that is where the Fib retracement tool comes in, and that is the same thing too for a downward trend. You can see impulse correction, impulse. For an LD downward trend, it must have impulse correction, impulse correction, impulse correction. You can see impulse. So now you can see impulse correction, impulse. Now there is a break of structure here. Can you see? We're having a break of structure here. So for you to really make use of the Fibonacci retracement tool, you must understand market structure. I think I'm going to be doing a video on that. So you must really understand market structure too. So we have the, can you see, this is a break of structure. Then we have another break of structure here. So this is another paper structure. And this is another paper structure. So impulse correction or impulse pullback or impulse and retracement. Can you see? So this is what we have in here. Impulse correction, impulse correction. See, impulse correction, impulse correction, impulse correction. Can you see? So now this is for uptrend and this is for the downtrend. So now for an uptrend, now we want to know, this is impulse correction. This correction now, we want to know how long. For this correction now, where will this correction get to before we're having another impulse? So now if we want to make use of this, well, this is what we are going to do. So let's make use of this for instance. Let's say you're in this market now and we're having an impulse and a correction here. What you want to do is you will come to your fib 2 here. This is where we have the fib 2. You click on this place. So the first one is the fib 2. And either click on it, or if you don't want to do that, just come here, click on it directly. So once this one is sticky, so you come here. So in an uptrend, okay, so let me go back and explain some other things before we now do the what's it called now, the practical. So that is the idea of the fib 2. So now we have some facts about the Fibonacci 2. So number one, it is used in a trending market. So a trending market is either an uptrend or a downtrend, like I'm doing here, uptrend or downtrend. So you can't use it in a ranging market. So fib 2 is used in a trending market. Then number two, you draw from left hand to right hand side. I'm going to show you now. You draw from left hand to right hand side. Then number three is that you draw from last recent high to last recent low in a downtrend, and vice versa in an uptrend. That means that in a downtrend, you are drawing from the last recent high to the last recent low in a downtrend, and in an uptrend, you are drawing from the last recent low to the last recent high. So I'm going to show you. Then the fourth thing is that there are levels you look out for. There are levels you want to look out for. Although, so there we have different levels. We have 38%, we have 51%, we have 61.8, we even have 78%. So but there are some major levels also. There are some major key levels. There are some people used to look at. Some people look out for 38%, some 51. In fact, 51% is what's it called now? Is from 51% above is what I advise that you look out for, from 51% and above. So let's go to the charts. Or before we go to the practical example, let me just use this example before we now go to the currency pair. So now you can see that we have, this is an uptrend. Number one, we use it in a trending market. So the number one low is stick. Then the other one is that you draw from left to right. Although you come here first. So this is an uptrend. You understand? Then you come here, you click on it, click on this arrow, click on the field retracement. Then the number two rule says that you draw from left to right. So you draw from left to right. That's you draw from left to right this way. Can you see? You draw this way. That is the number two. Understand? Then the number three rule says that you start from the last low, the recent high. That is an uptrend. So in an uptrend, you start from the last low to the recent high. So let me come again for you so that you understand. Now in this uptrend, this is the last low. This is the recent high. Then we are having a pullback. Understand? So once you now know this pullback now, what level did it get to before we had this impulse move? So what we'll just do, we'll come here, we'll click on it at 52, then we'll come to the last low here. Can you see? You click on it, then you draw from left to right. Can you see? And you make sure that this you make sure that it's resting on the recent high. Can you see this recent high here? Can you see? It's resting on the recent high. So you start from the last low here and you draw it up from left to right, and you make sure that it is resting on this recent side. Then if you look at this side now, just follow me. If you look at the left hand side, you see that we're having, you can see we're having some figures here, 0, 0, 0.23, 0.382, can you see? 0.5, 0.618, 0.786. So these are fib levels. These are different fib levels. You understand? But I used to advise that you pick from 0.5. I used to advise that you pick from 0.5 below in an uptrend. So what you want to do is that you come here, click on your horizontal 2, then this is your 0.5, then you click on it. Understand? So then you wait for it. So this retracement, now you can see that this retracement got to 0.78. Can you see 0.786 before the push up? So once the retracement starts, don't pick from 0.236, don't pick from 0.382. Wait till you get to 0.5. So anything below, you might want to pick. Yes, because from this 0.5 below, this is the discount zone. We're down in an uptrend. So this is the discount zone. You want to buy from discount. So from 0.5 below is the discount zone. So from 0.5 above is a premium zone. If it comes down here and it gives you some, it begins to give you some fake levels that want to go up. If you go and buy from anything 0.5 above, that is a premium zone. It will be too expensive, and your lot size will be too large. You can see that it got here, then it came down. You understand? It still came down. It didn't even stop at 0.5. It didn't stop at 0.618. It got to 0.78 before going up. So always check for levels around the discount zone, and the levels around the discount zone is from 0.5 below. So you are safe from here. At this level, you are safe from this level, because if you buy from this level, your stop loss will not be too large. So you are safe from this level. Alright, so you'll be safe from that level. So you'll be safe from this level. So you'll be safe from, so you take from 0.5 below. That is where you have a discounted level. You understand? That is where you have a discounted level. And that is how you apply your fib 2. You understand? Then let's go to the downtrend. This is the downtrend. You can see that we had an impulse and a retracement. An impulse, a retracement. So now we want to look out for the fib level for this retracement. We want to look out for the fib level for this retracement that we have here. So what do? We locate our recent low and recent high. So this is our recent high. This is our recent low. This is our recent high. This is our recent low. So what we do, we come to our 2 here, our flip retracement 2. We click on it. So since this is a downtrend, we are starting from our recent high. We click on it and we draw it down. Can you see? We draw it down. And we'll make sure that this is resting on the recent low. Can you see? So this is our recent low. This is our recent high. So for a downtrend, you start from the recent high and you draw down. Can you see? You draw it down and you make sure that it's resting on the last low. Yes, we have the 1.156 from the recent high, and we have the 1.15297 on the recent low. Then once we have done that, the next thing we want to look out for is that we now want to look out for the fib retracement level, where the retracement go to before the impulse move. So we want to look out for the fib retracement level, where the retracement go to before the downward trend. So like I said, once you have done this, the next thing you want to do is that we want to look out for the 0.5. Now this is the 0.5. So the 0.5 is the middle. It's the middle point, or is the midpoint. And since this is a downtrend, you are looking from a 0.5 upward, because that is where we have the discount. Since it's a downtrend, you are looking for a 0.5 upwards where to buy from. So anything is 0.5 below is premium, so you can't buy from there. You can't sell from there. So you are looking for 0.5 upward. Yes, so that you can be able to sell from. So this is the discount, this is the premium. So you can come here to your horizontal 2, then you look for 0.5, click on it. Can you see? Click on it. So anything above it, that is where you are buying from. That's where you are selling from rather. Anything below it is still at premium. That means it's still expensive. You don't want to sell from it to be too expensive. But you watch out for anything above it. So if you look at the diagram we drew here now, you can see that the retracement got to this level, which is 0.618, then started selling. So this is still premium. This is still discount rather. So you might get here and start selling, or you might also get here 0.786 and start selling. You might even get here too and start selling. So don't sell from premium, always sell from discount. And how do you get the discount? You look for the midpoint, which is 0.5 and above in a downtrend. Understand? And then you look for it, then you can apply your sell. So once the price has crossed the premium and has gotten to the discount here, and since it's a downtrend, you start looking for points of interest for you to want to take your sell. So that is that on Fibonacci retracement 2. That's that for Fibonacci retracement 2. So now I actually want us to I also want us to still go over this video again and again so that you can understand it. But I want us to check. There was a trade I took recently, that was on Friday. So this was a trade I took based on Euro USD, 15 minutes time frame. So I took it was a sell trade I took on this trade. It was a sell trade. So and you can see that what we have here now. Let me bring this here. So look at what we have here. This was a sell trade. So can you see? So this is impulse and correction. Please listen attentively. This is the impulse and correction. Can you see? So this is impulse and correction. So for this impulse and correction now, we want to know where this correction will get to before it starts what? Before the retraction ends. Then before we now look for a selling opportunity. Are you with me? So this is impulse and a correction. So now once you have been able to locate the impulse, now the correction will start building. So what you now do is that you will now locate the recent low and the recent high. Now this is a downtrend, so this is the recent low, let's see, and this is the recent high. Please just follow me. It's very simple. This is the recent low and this is the recent high. Can you see? Recent low, this is the recent high. Now the next thing you want to do is that once you have been able to locate your recent low and your recent high, then you come to your fib 2. You click on it. Once you click on it, so since this is a downtrend, you are starting from the recent high to the recent low. So you click on it, then you draw out. Can you see? You draw out and make sure that this is resting on the recent low here. So you can see it's resting on it. Then you drop it. So you drop it. So you have been able to draw this line now. Now the next thing you want to do, like I said, you look out for the discount zone. Since you are selling, the discount zone will be above, but it's going to be from 0.5 and above. So you locate your 0.5, and once you have located your 0.5, you come to your horizontal, to you pick it horizontal line, then you place it on your 0.5 to give you the middle point. So since it has given, so from 0.5 below, that is the premium. You don't want to sell from there. But from 0.5 above, that is where you have the discount. Understand? So once you do this, you can even remove the fib 2. So you know that we are looking from 0.5 and above. So this is where we want to sell from. So we want to sell anywhere from here. Please. Anywhere from this box above, we want to sell. So we want to sell anywhere from here. So this is 0.5 above. And so we want to sell anyway. And you can see that the price got to 0.5. Then it got to 0.618, then started coming down. Can you see? So this was the trade I took on Friday, and I took a sale and I made money from it. So you want to look out for let me use the Fibonacci trade again and click. You can see it got to 0.61 and started coming down. Can you see? So like I said, always wait for it to get to the discount. So this is the discount zone. From 0.5 above is the discount for a sale. Can you see? That's the discount zone. So you don't want to sell anything from 0.5 below. That's the premium zone. If you sell from there, it might take you out. Understand? Imagine, look at this. Because the market, the price can be deceptive. You know, look at what we have here now. You see, we had a last low, then we had a high, then we had a low. Imagine somebody has decided to go and sell from here now. If you have decided to go and sell because of this red candle, if you have sold from here, I see that the price now started going up again. It would have taken you out. So don't sell from your premium. Always sell from your discount, and your discount must be 0.5 and above. That is in a downtrend. So your discount must be 0.5 and above in a downtrend. Then let's also look at another example for an uptrend. So that's for the downtrend. So like I said, it's not something that is hard. Now, this is an uptrend. Can you see? Don't forget, fibed retracement is used in the trading market. Impulse, correction, impulse. Can you see? So this is an uptrend. So if you want to make use of this fib to now, this uptrend, what you do is that it's very simple. So the first thing is you locate your recent low and your recent high. So in this diagram now, or on the chart, this is our recent low. You agree with me that this is our recent low. And you also agree with me that this is our recent high. So this is our recent low and this is our recent high. So that's the first thing you want to locate. Then the second thing you want to do, you come to your fib 2 and you click on it. And since this is an uptrend, you start from the recent low and draw it up. Okay, you see? Draw it up and make sure it's resting on the recent high. Then you drop it. Okay, you see? So you draw it and you drop it. So now that's the second thing. The third thing you want to do is that you want to look out for your 0.5% or the midpoint is 0.5 level. This is 0.5 level. So you click on your horizontal line. You see, click on it, and then you drop it on it. Click on your horizontal line. You want to drop it on it. You want to drop it on it. So now after dropping it on it, from 0.5 below is your discount zone. It's your discount zone. And the 0.5 above is your premium zone. So you understand? So you want to buy from your discount. You buy from discount and you sell from your premium zone. You want to buy from discount and you sell from premium. So in this option now, you want to sell, you want to buy from anything below the 0.5, and that is where you have your discount zone. So since we have been able to apply our horizontal tool, so we are buying anywhere from anywhere below 0.5. Please, we want to buy anywhere below 0.5. We want to buy anywhere below 0.5. So that is our discount zone. And if we look at the chart, you will see that price got to 0.5. We also got to 0.618. Then in the middle of 0.618 and 0.78, that was where the retracement ended before we had a push up increase. So the retracement got to this level before a push up. So you can see that the end of the retracement was in the discount zone before a push up. So don't forget, always wait for that discount zone. In a downtrend, the discount zone will be below 0.5. In an uptrend, the discount zone will be above 0.5. So that is that. You can see it came down below it then before buying. So imagine if you have gone to buy, probably around this place. That will be any buy, or you are going to buy around this place. So be at any, and the market can come down, you can see, and you would have taken your stop loss. So always wait. And it's not just the Fibonacci retracement tool that you are going to use as a confluence for confirmation. You can also make use of your candlestick pattern, or you can also check out for your liquidity too. Liquidity validator zone. For me now, what I use for my confirmation most times, I use my liquidity, mostly liquidity, because that is what has been working for me. So I think I'm going to do a video on that. And if you want me to do a video on that, you can put a comment, you can drop it in the comment section. So this is where we are going to draw the curtain for today's class on Fibonacci retracement 2. And then it's something I want you to go through and also practice. You can go through it and go on the chart and do a retest on it. You understand? Go on the chart, retest as many examples as possible, because the more you do, the more you know, and practice. So practice as many examples as possible. Practice. This is not something you just watch once. Watch it once, come back again, go and practice. Go back again, watch it again, and then start practicing it. And if you have any question, you can drop it in the comment section. I'm going to reply to your question. And please don't forget to subscribe and like my video so that I turn on the notification button so that whenever I drop new videos, you are going to see it and you're going to learn from it. Alright, so I'm going to see you in the next one. Bye.